Got a couple quick charts here. This one's kind of neat. Just made us a nice title, Return of the U.S. Consumer. So one of our things we've been kind of riding this whole idea of a bull market on cattle is the fact that the recession is over and we are slowly recovering. We're in recovery phase right now. And that also means the U.S. consumer is a key issue to keep on track of. One thing I kind of saw, which was interesting this morning, a couple of quick searches of the news wires, saw that stores, at least mall sales. One story I saw regarding the Shopper Track survey, this is that during on Friday, sales were up 0.3%, so almost even with last year as far as same-store sales in malls. Online sales, though, according to IBM's Core Metrics group, it said Thursday through Saturday up 14%. So we are seeing the U.S. consumer take a little better step into this economy than what most people are thinking right now. Of course, we won't know the final good numbers until Thursday. This will be a key report for us on the cattle end. And when I talk about cattle and this whole economy issue here, they're kind of tied together because beef is a premium, high-priced meat. If people are feeling poor, they're not going to buy the beef here. So I just want to point out that as we head into the end of this year and we're turning towards 2011, the wholesale meat buyers are taking a little better attitude to this market than before. I also want to lay out why we kind of have some of these premiums laid out in this market and what they look like by historical margins. Cash cattle sales last week jumped to 101, 102. That's shown by this green dot. We do have futures saying that we may trade down slightly here by the end of the year for the month of December. One thing I'm looking at here is, though, February, April, and June futures. These have these huge premiums plugged in here. And why is that here? Though we are going to have a little higher production, we're still betting that exports will be still doing great. The key issue why we have these huge premiums, in my opinion, is because we got a U.S. consumer that the market is betting is getting back in this market. Our upside targets for February of 104 and April of 108 have been hit. Maybe I'm too low. I'm still saying that if you're going to work on some sales, maybe wait for the 110 mark on the April to start some sales here as far as the April contract. But the fact that we hit these upside targets of ours so early, we're not even in 2011 yet, I guess is one thing that kind of shakes me up a little bit here. So I'm still kind of bullish on these guys, even though our upside targets are hit. I don't see any reason to work on any panic sales here just yet. This is a nice 2011 picture we have laid out here. Another issue on the hogs. One they're kind of looking at here is, will we have these, this is the lean hog index, what futures will settle against. In other words, this is a cash hog chart right here. We have the lean hog index showing some 63 quotes, but yet we have futures right now at 69. That's $6 difference in only, what is this, December 14th when these things expire? In only 2 weeks. Is that right? And I just want to kind of point out, by historical standards, if you look at this dot, which are the 10-year average for cash hog prices, we do have a rally going from late November into mid-December. That's what this market is betting on, these higher prices, while we have cash hogs here and December futures here. So I just want to point out that historically we do have a run in higher in cash hog prices, which is what this market's betting against. So don't sell that December thinking that we're not going to make that spread. Just want to make that point out because I had a couple guys ask that here. As far as 2011 pricing, here's the futures contracts in these red triangles. We do have prices higher than 2010 here for the most part in most of these contracts. So for hogs, it's kind of interesting to see that we have lower slaughter still hitting, or lower slaughter should be hitting at that time, and hopefully we're going to have good exports and hopefully the U.S. consumer back in the market. So good news for that end.